You're quite the optimist when it comes to the Kenyan economy. On the Kenyan market activity front, though, we're yet to see this this market really ramp up in terms of upward move. How are you reading the kind of tempered movement we're seeing on the NSE right now?
Well, I think we're up, the oil shares up about 45% for the year, and we've stalled pretty much since the constitution came into force in August, and we've been sort of flatlining at these levels since then. But I think we've had a cocktail of good news, which is going to continue to support this move, which I think is worth another 10% into year end. We've had the upgrade from S&P. I think the economy is going to surprise to the upside. Consensus is at 5%. We've had this mobile phone price war, which I think has been very democratic and has been a secondary stimulus in the second half, which is not to be underestimated. And I think when you put all those things together, I suspect that the stock market's path of least resistance is higher by another 10%, but I do accept it's stalled a little bit of late.
Well, one area where things have certainly been looking up is within the banking sector. Let's hone in on that sector with more all-round performances coming through. We had the Central Bank of Kenya report reveal that the banking sector is set to record higher profits this year compared to last year and boosted by enhanced economic activity specifically. What's your view on the health of the banking sector in Kenya as a whole?
I think the banks are highly correlated to GDP. We've had a spike higher in GDP up to this 5% level, and I think, I would expect that correlation to be playing out just as it is. Within the banking complex, clearly there are different banking models. People are, the curve is not uniform for everybody. You have the outperformers, you have what I would call the steady as she goes, and then you've got some who've yet to fully pick up. But on balance, if you want a pure correlation with GDP, this sector remains one of the best ones to play. The banks as a whole have made a windfall profits in the bond market. The government of Kenya bond curve rallied sharply. These guys got very long all the way, and they've done extremely well. I think you're going to see more extension into the retail and corporate lending side. And I think it remains in a sweet spot. I don't see any problems with it as a niche at the moment.
Barclays Bank of Kenya out with numbers on Friday, and 9-month pre-tax profit up 6%. What did you make of those numbers released? Because the market is seeing very muted reaction to those numbers.
Those numbers came after the market closed, or pretty close to that, on Friday. I think, the market was hoping for a little bit more acceleration in Barclays earnings. Plus 6%, I think, was quite disappointing against the class. The class was, some of the class was up over 100%. But you don't expect Barclays to be, in that sort of range. But I think those numbers that I saw are speaking to a turnaround, and I think the EPS is going to encourage investors to get into the stock. It's been in a 62-70 range. We're right at the bottom of the range. I can't see us breaking the downside. I see a sort of near-term relief bounce.
Looking at one of the figures there, we've had loans and advances to customers falling 5%, but provisions for loan impairments more than doubling to 1.2 billion shillings. To what extent has that raised a few alarm bells for you?
Well, I think what they are saying is that they've got a maturing loan book, and you're coming up with the principal repayments, and therefore they're being prudent. Barclays are notoriously prudent. I don't see any big loan loss problem at Barclays. I think they're just prudent. They're just putting some money away in case the loan book, as it matures, takes a few more losses than they expect. They're very conservative. I don't see a problem on Barclays Bank's loan book at all.
Barclays Bank, of course, recently completed the sale of its custody business to Standard Chartered, and what it was set to do with that money has been the big question ever since that sale came to light. Do you see any further clarity on that front? Has any further clarity emerged?
Well, I think investors pushed the price up to 70 not so long ago on the expectation of a special dividend. But I think Adan Mohammed, the MD, put that to bed when he said, he had plenty of places where he could reinvest the money. So my impression is that, they do have a handsome payout anyway. I think it's about 4.25% to 4.5%. But I think investors who were expecting a special dividend are going to be disappointed.
Well, Barclays Bank, as you said, trading in a range of between 62 and 65. It's come off that 25-month 2010 closing high of 70 shillings. Aly Khan, are you a buyer?
At this sort of price, you know, I think I'm a buyer of other stocks right now. I prefer to look at a higher growth trajectory in the banking sector. You've got some interesting mid-cap banks like Diamond Trust on a forward PE of 10. You've got KCB on a forward of 9. I'd prefer to play those corners rather than Barclays right now. But I think the investment case for Barclays remains strong. It has tremendous name recognition, and it's the first share foreign investors tend to reach for. And at this price, trailing P of 14, it looks pretty undemanding.